I see we have all time zones represented today. This is the Big Joel community call. Has been happening bi-weekly, but I think this might be 3 weeks. A tiny bit of housekeeping. You are going to be getting a new invite for this call. Those of you that have been on here multiple times know that all you have to do is register once, and then the call goes in your calendar. If you want to hop on, you can hop on because obviously it's a free call. But I know there's been a little bit of confusion on timing and when calls are starting. We always do text, but Josh, am I correct? Should they delete the call and you're going to send a new one, or just accept the new one?
If they've already accepted the old one, there's nothing they need to do, but no harm in accepting the new one and making sure it goes in their calendar right.
Okay. All right. Excellent. And you can always reach out to us if you're ever confused whether there is actually a call on that day. So welcome. It's now April already, which is pretty amazing. We have Easter coming this weekend. Normally, those of you that have been around me for a while know that usually pre-COVID, the spring market really starts when the Easter bunny pops up and wiggles his ears, and we all pound a bunch of chocolate eggs. But I think we all know it's been weird for the last 2 years. We haven't really even had a spring market. We've just had an everything market. Now we've been experiencing basically a nothing market as far as inventory goes. Good news across the country. I am hearing and have physically seen lots of agents that have lots of listings about to come on the market. So, if any of your staff is mildly asleep at the wheel and you have been taking a lot of pre-quals and pre-approvals, and those of you that are in Joel world, you do have a ton of BICs. My bet is you're going to explode very quickly. So I would make sure that you are really working that program and everything is up to date. All your docs are up to date. So you're not basically originating loans twice is what a lot of us end up doing. A couple of things to note. This call is on Facebook Live. It's on LinkedIn Live, and it's on YouTube. Anyone that misses the call, misses part of the call. Anyone that asks you about the call, you can go find it on YouTube, The Big Joel Show, or any of those places. We post the calls right when they're done. For those of you that are new to this call, we do use the chat. If you are actually watching on Zoom right now, Mr. Luzzy, we do use the chat. You can put something in the chat. If you have a question, feel free. We will take a look at it and answer it if it's appropriate for the whole group. So we do like to keep these calls to right at the 30-minute mark. This week, I do have a special guest, Michael Ullman, who I'm going to get to in a minute, who I think will have some good things to share with us. I just want to reiterate one more time. I got a lot of great feedback from owners of companies and executives on my last couple of calls when I was basically ranting and raving about the fact that we don't control the rates. We're not in business to give out rates. We don't really care what the rates are doing because we can't set them anyway. Our job is to actually originate loans and close the loans and get people into houses. If we could control the rates, I think most of us on this call would not be here. We'd be flying on a private jet somewhere and we'd be a bond trader. The other thing I've been yelling and screaming about is making sure you're pre-qualing at least one over. I was talking to, I don't see her on here right now. I don't know. Mike Ullman and I might have been talking earlier about this. And I'm betting, Mike, I'm curious what you think, but I'm betting that maybe 75% of active loan officers right now have never really seen a market like this where the rates are just moving all over the place and continually just going up. I know James Hoddle has because he's extremely old, like Ed Brem and Rick Sedbury, but there's very few people, there's not a lot of people still originating that have really seen that. You guys are and gals are used to just originating 30-year fixed loans. You're used to locking it when you feel like it, because the rates haven't moved around. And there's lots of war stories about people just getting caught all the time. The other thing you never want to get caught doing is having to tell an agent partner, oops, the market moved, your person's no longer qualified because you were too scared to look the borrower in the eye and tell them you are literally qualifying them 1% over the market rate today, which is the smartest thing you could ever do. Any of you all that think I'm crazy or just old or don't understand the clients, and if you did that, they'll run. I'll just put it out there. You're 100% completely wrong. You've probably already proven that to yourself right now. If you pre-qualified anybody very close to the vest and they're no longer qualified for what they were looking for. What a great market to really dock out files as well, because it's so easy to inspire the consumer to really hand over their docs. Because I don't know about you, and I'm going to ask Michael Ullman about this in a minute, but the best loan officers in the country are selling all their deals through. I mean, they're literally talking to the listing agent and selling their deal through. To make sure that they get it through. And I don't know about you, but I've never lied to a listing agent my whole career. And if I have a file that's not completely docked out, the last thing I'm ever going to do is tell a listing agent the file's docked out and it's good to go. Okay, if I don't have everything, I'm not going to say I have everything, which means they're going to take the next offer. And in some of your markets, there's 11, 12, 13, 15, 18, 20 plus offers on a property. And you all are having to do a lot of work. I don't know if Jen Miklos is on here right now. We were talking a little earlier. She's a 20 plus year veteran in Claremont, Florida. She said, Joel, I don't remember ever working this hard before. And what she meant is having to do so many letters and work so much with each client to eventually get them in their house. And your agent partners are honestly, they are working just as hard, if not harder, taking these people all over the place and writing crazy offers. So the other thing I want to bring your attention to is, if you have never sold any products that weren't a 30-year fixed before, you should take it upon yourself right now to actually learn how to sell other products. You will be selling them very soon. You should know how to sell them. If not, and your client talks to you and then talks to me, you are going to lose the deal, period, end of discussion, because I know how to sell an ARM and I know how to sell lots of alternative products. I know how to teach a consumer how good it is for them. I know how to teach a consumer how to prepay principal. I know how to explain a reset on an ARM in at the 12-month anniversary. I know how to explain all that stuff. So you don't want to be competing against me or a bunch of people on this call, because you're going to lose your buyer at 100 miles an hour. Okay. And a lot of you have never seen that before and have never had to deal with it before, but I will tell you, I would find someone in your office or go to your manager if they've been around for a while and start getting them to explain to you how to sell these alternative products, because the mortgage business is very, nubile or whatever. We move around correctly. Rates keep going up a little bit. We're going to start getting more cool exotic products. That doesn't mean people don't buy houses, everyone. Just so you understand, if you've been doing a bunch of refis and you're screaming and crying, doom and gloom, the sky is falling, Chicken Little, wah, okay, get over it. As soon as the inventory starts popping on, people buy houses. They don't care whether they reach 12%, 6%, 4%, or 8%. They got to buy a house, they buy it. I can tell you that is factual. Anyone in your office that's been around for a while will tell you the exact same thing that I'm telling you right now. Okay. Need-based refis never go away. You need cash out to send a kid to school, divorce, death of a family member. Those always happen. Rate-based refis only happen when it makes sense. Okay. Period. Rates go up a little. Oops. Doesn't really make sense for most people anymore. I guess the good news for this market is the gorillas that are taking market share right now. You're going to have a lot of people to refi when the rates eventually pipe down a little bit. Okay, I want to introduce Michael Ullman. He's a good friend of mine, and we've worked together for a long time. Michael's currently at Movement Mortgage. He has moved around in his career. Michael is a purchase money originator. Of course, he did some refis last year, but he's very focused on realtor agent relationships. That is his jam, which means he cruises right through a market like this. Michael is in the Northern Virginia market. It's DC Metro. He lives a tiny bit outside of DC Metro, right? Just in the woods a little bit. But Michael operates all around the Beltway in Maryland, DC, and Virginia. So he's not one of those super high average loan amount guys that you would think, because he does loans all around the Beltway. So Michael, first of all, just as far as the agents go, what are your agents saying right now? Are they still completely freaking out? Are they starting to relax a little bit? What type of psychological counseling are you giving daily to your partners?
Oh, man. I've never been more of a psychologist than I am right now over the last 6 months or so. Agents are, I mean, when I'm talking to them, they're constantly asking, like, hey, what are you seeing? What's going on? You know, if I'm talking to an agent that's 30 miles outside of DC, they're asking me what's going on 5 miles from DC. They want to know kind of what's going on. Hey, you know, our house is getting 20 offers every time, or is it just the houses my clients are writing on? So I'm talking to them about that. The other thing a lot of agents are asking me about is less about how many offers are being made. They're asking me if the clients that are winning contracts that I'm working with, what are they doing with contingency? So I'll have one agent asking me, hey, you know, they'll ask me, hey, how many purchase contracts do you have this month? I'll say, I got 15. And they'll say, all right, did all 15 waive the appraisal contingency, or did they agree to make up a certain amount of a gap? You know, so these are the sort of the conversations I'm having. To the extent that I can, I'm trying to keep them as positive as possible and telling them that, you know, some of the clients that I've been working with that lost on a bunch of their offers, the first 10, now they're, you know, the new clients, it might only take them 2 or 3 offers to get a property. So I'm trying to keep them encouraged with that. And I'm also speaking with them generally about, you know, the strategies that we're using for the clients that are winning regarding appraisal and financing.
Yeah, let's talk about that. So talk about some of your personal strategies that you're using. I think it's amazing. You know, when people like you tell me, it sounds so logical. Mike, maybe just move your hand away from your mouth to make sure everyone can hear. When it sounds so logical, but not everyone is doing it. Not everyone's doing the same thing. Tell me about some of the things you're doing almost on every transaction right now. What has become modus operandi for you?
All right. So obviously, not a single client at this point has a home inspection contingency, but that's been like that for a long time. Specifically from our end, financing and appraisal. You know, I'm talking to the clients about, especially the clients that have larger down payments. I'm talking to them. Hey, you know, on the first conversation, they'll say, "No way am I going to waive an appraisal contingency. It's just like I won't do it. I need that protection." But then I'm sort of warming them up to the idea, hey, you're putting down 10%, but you qualify to put down 3%. You know, if you either waive your appraisal contingency or at least waive a certain gap, I can make up the first 5 to say 7%, sometimes more. If they're putting 20% down, I can make up that gap so you're still protected. So I'm talking to the client about that. I'm letting
now,
the agent.
Are you running those numbers for the client as well right up front, even though it might be a fictitious property? Are you giving them different looks?
Absolutely. Yesterday, a client wanted to write. My average loan size is small, but just give an example. A client wanted to write on a 970 purchase. Purchase price was 900. They were going to write 970. The property's in Burke, Virginia. I don't know. It's 20 minutes outside of DC, or 20 miles maybe. It could take 2 hours or it could take 20 minutes, depending on traffic. Anyway, his goal was to go in at 10% down. I showed him, hey, here's the payment with 10% down. Here's the payment with 5% down. I just said the first 5% of this price that you're offering above and beyond the list price, I can make up. So it was like 45 grand, somewhere in that range. And I'm showing it to them. Here's the payment. Here's the change to MI. I don't know. There's 50 something loan originators on the call right now. While rates are going up, mortgage insurance is like, it's the cheapest I've ever seen. It's like borderline free. They're all competing with one another for market share. So the little difference you see with 10% down or 5% down or even 3% down, if they're below 647, 200, the difference is negligible. It's so small that from a monthly payment standpoint, it's almost meaningless to the borrower. So this is what I'm getting the borrower on board with that, and then I'm getting the agents on board with it as well. Every offer I speak to a listing agent, like I pretty much hound the listing agent. I call them. If they don't pick up, I text them. I email them. Sometimes I text them and I'm vague about like why I'm texting to get a response from them. And then I immediately tell them why I'm get them on the phone and I tell them why I'm calling. So I'm letting the listing agents know as well that the borrowers, sorry.
That's all right. No, I just want to make sure.
I let the
everyone can hear
listing agents know as well, have the funds to make this transaction work. I mean, I've never spoken to more listing agents than I have over the last year. And generally speaking, even the ones that have 20, 30 offers, I think what they do is they sort of cut down the 20, 30 offers to maybe like 8 or 10, and then they take those serious. And then they really do want to talk to the lenders on those offers.
Michael, how many purchase units you closing in April, and how many are you got from May already, just to give people a feel? Just purchase
15,
units.
I'm closing about, I only have purchase right now. I'm closing 15 purchase units in April, and I think I have like 5 or 6 in May, but we ramp up super quick. So I'll be at 15 in May as well. Like, so my contracts come in the third week to the end. Yeah.
I just wanted to give everyone perspective because Michael's busy. He's not closing 3 loans a month. So he's talking to a lot of listing agents. Listen, 15 purchase units for the month is legit for April 2022. Okay. And guys like Michael, just so you all know, he's going to take market share in this kind of market. He's going to take your agents from you. All right. If you're not out doing the right thing. I just want to paraphrase one of the things he was talking about. He went through it very quickly. He's smart. He's a math guy. If you don't know how to pencil sell, you've been hearing me yell about this for like 6 months. If you do not know how to pencil sell, which is basically what he's doing with the MI, if you don't know how to give people options and really explain to them the best ways to do it, you're going to get your butts kicked by experienced loan officers all over the place. And you're going to be crying and complaining, my rates are too high. Wah! Nope. You talked to the client completely wrong. And then the client accidentally got to talk to someone like Mike Ullman, and you were toast. Because Mike Ullman ran the numbers, did the numbers correctly, and showed the client different options for what they could do to make the client feel more comfortable and trust the process a lot more. And don't think that's not lost on agents. The feedback I'm getting from agents right now is immense. Joel, I have all these loan officers calling me, wanting to buy me coffee, and most of them have no idea what they're doing. I haven't seen them, met them. I don't even know who they are. I don't even know how long they've been around. And it's very clear that they do not know what they're doing. Okay. The other thing is a lot of these loan officers have lost their LOAs and support staff. They have been laid off. Now you have a loan officer that doesn't know what they're doing and no one to help them do anything. So it is a very bad combo out there for the agents. So it's a really good time for you all to shine in a big, big way. Now, the other thing very quickly, I want to make sure you all hear this, and I want Michael to talk about this a little bit. I've been telling loan officers, hey, if your phone is ringing and you're doing pre-quals, you're fine. Okay, you can't control inventory unless you want to become a builder and start building stuff. So you could do the loans on what you're building. Okay, you can't control inventory. Inventory is controlled by the market, and it's slowly coming back. You should be taking a lot of pre-quals right now. Michael, is your pre-qual activity through the roof right now?
Correct. So we got, I think on the call is my someone who works with me, Victor. I don't know. We probably have a database of 200 pre-qual buyers. If some inventory comes, we are going to be busy as can be. And we have a ton of pre-approved. We're
pre-approving like 5 today.
Yeah. So
pre-approved 5 today for us.
Yeah. So those of you that are busy doing a lot of pre-quals, you better take a look at yourself and see what you're doing all day. What have you done today to deepen an existing relationship with a referral partner or develop a new one? Because if you didn't, Mike Ullman's at lunch with your person right now, and that's going bye-bye while he's doing that work. So, Michael, tell us. So you're calling the listing agent on every deal and schmoozing it through, and you're stalking them. Everyone, I hope you heard him say that. I kind of snickered at that a little bit because I know him well and I could see him doing it. But you're finding them. You're connecting, right?
So I have the agents, at this point, all the agents buy in. Like any agent I work with buys into this. Maybe 2 years ago, they got in their own head and said, I don't want Mike talking to the listing agent. He might screw it up. I don't really know. But today, all the agents I work with buy in. An offer is made. I'm CC'd. I can talk about our market. In Virginia, an offer is made by email. There's a contract attached to it. A pre-approval letter is attached to it. I'm CC'd on that offer. And the agent I work with sends me a text as well and says, hey, Mike, I just made the offer. this is the listing agent's cell phone number. And that's when I know to go. I respond to the offer that they make by email. I let them know I'm going to be reaching out. I call them, I text them, and then I basically like hound them until they pick up. Like it'll be very difficult for a listing agent not to hear from me on an offer.
Now, I just want to let everyone know, it sounds so logical, right? You know how many loan officers are not doing this right now? Let me help you out. A lot of loan officers are not doing this right now. They send an email, they might send a text. They are not actually connecting with the listing agents. And I can tell you, the loan officers that are closing 15 purchase units in April. Okay, those are the ones, when you guys are busy crying, call me a wambulance, wah, wah, wah. No inventory, no loans, whatever. Where did Mike Ullman get 15 loans from? Why does he have 15 and you have 2? In the same market? Why is that? How's that possible? I can tell you a big piece of it, besides he has strong referral relationships, is he's actually connecting. I know this is a weird thing, actually talking to someone when we could text or email and then go to lunch, just basically hide behind technology. He's actually talking to them. Okay. If at the end of the day, you don't feel almost the busiest you've ever been in your career right now, you're doing something wrong right now. Okay. That's how busy you all should be if you're doing your job right, because you're probably working on every file like 10 times instead of twice. Okay. And I want to throw one more thing out there. Those of you that have been through crush groups or have been with me for a while, man, if your files are not BIC right now, you're insane, because you're going to feel like you're originating each one of them twice when that contract comes in. Okay. That thing should be docked. Those docs should be up to date. It's taking people a long time to find houses right now. You should not get a contract, pick up a file and go, oh crap, got to redock. Okay. And how about, oh crap, even more? I pre-qualified them 1% lower and they changed jobs and don't have overtime anymore. Now you get to go tell the agent, oops, we didn't check to see if they changed jobs, and oops, sorry, we pre-qualified them one below and never looked at it. Okay. It's a big lesson there. You do not want to get caught. Those real estate agents will bury you in the market if you get caught on that. And they're right. They should bury you. Michael, anything else you're doing? So you're, just to clarify for everyone, your agent partners are putting you in the flow. So you see the contract go, the listing agent sees your name, then you're getting a text, which is wonderful. You've taught them to text you, hey, Michael, go. Right? This thing just went. Like if you're not seeing your email or whatever, they're texting you, telling you to go. Anything else unique? Anything else you're doing? Are you having to pencil sell? Are you getting VA loans through right now? Talk about that a little bit, because I know your market's mixed up.
All right. So we're, from a VA loan standpoint, we're fortunate enough that because there's, Fort Belvoir and Andrews and Quantico, a VA offer is much more acceptable in this market. Those I do have to sell. I got to get on phone with a listing agent. I got to let them know, hey, the fact that this vet is putting down 0 means nothing. They have assets. They have great income. If need be, we can work on appraisal. If they ever talk about low appraisals, I let them know about the VA, rebuttal process. So a reconsideration of value, rather. In this market specifically, I'm still able to get VA offers approved. And I think that is primarily because of where we are. What
about FHA? What about FHA? Michael, across the board, as I talk at the top of the house to a lot of executives and they look at margin compression and profitability per loan, one of the reasons that a lot of lenders were able to give sharper conventional pricing was their FHA mix of business. And everyone's FHA mix of business went down in 2021, not because there weren't those buyers, because those buyers couldn't get their contracts accepted. So people were having to switch over to conventional just because of what the listing agents thought about an FHA offer. Or do you have FHA pre-quals?
I do. So
I run, get those through.
I run about 35% Govy, 35% Govy, the rest conventional. I'm able to get, to some extent, FHA through, and I'm able to get VA through. What I have not been able to get through with any real level of success, I typically run in any year about 15% bond, some of it conventional bond, some of it FHA bond. That is a heck of a sell right now. I'm way down on bond. And I'm
Yeah.
really just talking to the clients and saying, hey, listen, this loan came with a 2% grant. I'll increase your rate and give you 1% towards closing costs, whatever it is. And we're getting off bond. The bond rates just in general, I mean, the Maryland Mortgage Bond Program, if you want to give a reasonable grant to someone, the rate's north of 6% right now. The DTI restrictions are a little bit more difficult if their credit score is below 680. The Virginia program, the rates are higher as well. So I'm doing less bond, but I am getting FHA and VA through. But it's taking a lot of convincing with listing agents. The one thing that you said, am I doing anything different? It's not that I'm doing something different. I'm just doing more of this. I've always sort of taken the approach of hold the pre-approval letter hostage. Like that's I don't give, there are some sort of clowns in our market that give a Word document to an agent and say, put anything you want, send the pre-approval letters. I never did that, but I especially don't do that in this market. If a client wants to write an offer, the agent is telling me the property, the sales price, I'm running the numbers specific to that property so that the client knows exactly what the rates are today. Because maybe when I wrote a letter last week, the rates were 3/8 lower. I mean, we've had some real bad weeks lately. So I'm not giving up pre-approval letters unless I've run the numbers for that client for that specific property. So there's none of this game. I give an offer, I give a letter on, Saturday, Monday, the contract comes in, I disclose the file Monday, and then the client says, oh my God, the payment's $500 more than I thought. Like that is not happening with my team because I'm holding the pre-approval letters hostage. I'm not giving agents letters unless they're tied to a specific property that I've ran the numbers for that client for. Especially important today.
Yeah, and a big theme here, and Michael said a lot of this stuff really fast. That's why I'm repeating it and unpacking. I want to make sure everyone heard. This is a pro LO, meaning professional loan officer market. I mean, if you don't know how to do your job, and what I mean by do your job, it has nothing to do with quoting someone a rate. It means structuring and putting files together and putting things together in the best possible way for the client. If no one ever taught you that, you need to go find someone to teach you that in your office. If you're one of those loan officers that just skated into the market and just been banging refis and literally just doing 30-year fixed loans, and if you had to explain a 1-year ARM, you'd have a meltdown, like literally into the floor. If you're one of those people, it's okay, but you need to find someone to really teach you how to pencil sell. These agents in this market, they are frustrated, they're disappointed, they're disturbed by how many times they have to show someone a property. They are all gravitating towards really professional, really good loan officers. Even the ones that have, a relative, oh, my cousin Bobby's now low, I'll give him the deal. That's over. It's just over. I coach and mentor some of the best real estate agents in the country. I am telling you that is over. There's a complete flight to quality right now. You will be selling cars 6 months from now if you don't get it together. I don't care what the rates are, whether they go up, whether they go down a little bit. It doesn't matter. There's a lot of really professional loan officers that are not going to go backwards in this type of market. They're going to go forward and they're going to take more market share and can very quickly explain to a client all their different options and all the different ways to look at things. The agents are expecting that. The people are jittery. They've looked at a bazillion houses. They're totally stressed out. They want to give up. They're expecting us to really partner with them, not just be an order taker, to really partner. And that's what's moving us toward a deeper and deeper relationship. Mike, as you sit here, because you're not a LO that's been in the business for 25 years, as you sit here, what advice would you give everyone, newer LOs, older LOs, to make it through this market? Because I think we're going to have a lot of casualties. By the way, I've seen this before. This is going to be my 4th time watching this, and I've seen how this goes. And what do you think, Mike? I mean, the strong literally survive. I mean, the strong LOs survive, and hopefully you saved your money and you only bought one Porsche and only one second home. You didn't buy a portfolio of rental properties that you're giving back right now because your income went from 30 grand a month to 3 grand a month in about 10 seconds. Okay. Hopefully you were smart this time. I see Joy cracked a small smile there. Joy Wood, just a small smile. She's been around for a while, so she knows. But I hope you saved your money because this is where the strong survive. Rick Sadberry, I was giving him a hard time. He's bearded Rick a minute ago. We were just talking about it, man. He's banked up and ready to go. He's going to outlast you, and all you're going to see is his backside when you're trying to get by him to talk to an agent because he'll wait you out while you're complaining about what the rates are or whatever. Michael, what advice as we close? We're already over 30 minutes, but everyone always loves hearing what you have to say. What advice would you give? Not to totally put you on the spot, just you could go broad for everyone to survive, to push through this.
I'll do 4 things. 1, all these seem elementary, but the business really is elementary. Just do the elementary things. 1, lock your freaking loans. If a contract comes in on Saturday and your company has weekend price protection, do not be lazy and wait till Monday to lock it. Lock it on the weekend if your company has weekend price protection. Anybody that's had movement, you have it. I can't speak for the other companies. Lock your loans. I don't care if the market's up big today. We've seen over the last few years, it could take a huge SHIT the next day and for several days. So lock your loans, please. Number 2, get used to selling, and this might make this a little bit longer, get used to quoting rates with points. Like your competition is doing it, so your clients will pay a half a point, a quarter point, a point maybe, whatever it is. Start quoting rates with points. For clients that are putting more down payment than they need to, potentially look at quoting a lower down payment and using 1-2% of that down payment to buy down the rate. The way the mortgage coupons are trading right now, 1 point might make a huge difference in rate and payment. So start looking into that. Number 3, deepen your relationship with your agents. I'm trying to talk to every agent I know constantly, and I'm using the market, rates going up, just the competitive nature on offers. I'm using that to talk to agents that I work with more than I ever have. I think that's 3. And then the 4th is the loans that you are closing, make sure that they're in some kind of database, because if rates do drop at some point, a year, 2 years, who knows when, you're going to want to get 2-3 loans for every one you did. So make sure to stay on top of that whenever that happens, if it happens.
I want to add one thing, Mike, and this is something I've been seeing across the country with teams. Make sure your team is not lazy. And let me tell you what I mean by that. Is I would rather have your team member, Michael Most and I just talked about this, at 12 noon say, I'm done, leave, and go get a massage, than take their work and stretch it out till 5. Just because they're stretching it out because they don't have anything else to do. Because let me tell you, when you suddenly close 15 or 20 loans instead of 3, they're going to crack and fall apart because now they've figured out how to close 5 loans a month in 8 hours a day. Okay. And I'm seeing this happen everywhere. It's a fatigue thing. Dude, tell your people, if you're done, tell me you're done. Go get an ice cream, go work out. I don't care. Don't find stupid stuff to do if you don't have anything to do, because when we do get busy, and by the way, we will get busy. You can take that to the bank. We're going to have massive months coming up. Those loan officers that have tons of pre-quals fully docked are going to have immense months coming up. And by the way, everything is contract to close right now. They're all going to be quick closes. So your people are going to be running around trying to redock files. They're going to be whining. I mean, you're going to need like towels for the crying that's going to be going on about how busy they are. And the bottom line is they're not any busier than they were last year. They just now have a quarter of the stuff to do, and they're still busy. So I'm telling you, keep an eye on this. Patty's trying not to laugh right now, but I mean, she knows I'm right. I mean, this is exactly what's going on right now. Okay, people are just figuring out how to be busy in their normal time slot, but it's a quarter of what they had before. Okay, I'm telling you, watch out for that. Those of you people running teams or managers on this call, watch out for that, because that is coming. I'm watching this. We are trying to tell team members, literally, if you are done, I'd rather have you go home and watch SpongeBob than sit in the office and pretend to be busy, because it's going to be a big problem when we triple our volume. So everyone, we're over Thank you so much for tuning in today. Michael Ullman, thank you a ton. By the way, Michael Ullman's all over social media. He's a guy that likes to help. If you have any questions, you can reach out. He's very easy to find. But by the way, his name is funky. 2 L's and 2 N's at the end if you're looking for him. Ullmann, Michael Ullman. You can find him on Facebook or whatever. If you have a question, I'm sure he would love to answer or would be glad to answer. Michael, thank you for your time. Everyone else, get out there, stay busy, no crying. This will turn, and when it will, I want you to succeed. Talk to everybody in 2